Hey guys, welcome back. In today's video, we are talking about the massive short exposure, the offshore swaps, AMC squeeze point, and many more in this video. First, we're taking a look at this. I have seen AMC apes buying thousands of shares today and probably 10,000 plus this week. The one thing you will never convince me is that the float isn't owned many times over, which more than anything a share count in this cricket stock market was possible. So we take a look at this from this particular user who bought over 1,900 shares in just one day. Now, this is just one example of many. In the past, I've shown different people who have bought plenty of shares, who have bought thousands of shares on their existing thousands of shares that they already have owned. And you can see here, if each member of AMC Investor Connect on the average holds the same number of shares that this user purchased today, the IC community alone would own 7 AMC floats. Then we've got all the rest of us who owns AMC but are not members of IC. So one of the things that we obviously struggle with is knowing truly what the count of AMC is. We've known that the float of AMC has been sold many times over. One thing we never know though is just truly how many times it's been sold over. What we can do is, of course, try and gather data using the averages, using things like the Investor Connect, which shows us the amount of investors, which talks to us about how many shares that people could own, and obviously get an idea of that. And just from Investor Connect alone, you can see it's very possible to own up to 7 times the float. And then that's not even including people who do own AMC shares, but of course not members of it. Like we've said, we definitely can't get a defined count, or at least right now it's not possible. But with the data we gathered, we know that it is in the tens, if not 100x, the amount of AMC float that exists out there. Now, you have to realize it isn't just a massive exposure on short sellers for AMC on their short position, but also massive gamma exposure on the synthetic short positions. It's crazy. All it takes is one catalyst to blow the lid off this thing. No one knows when it will come, so just buy the dip. And just like what we've said in the past as well, we've seen from data about the short positions that took place around 210, 220 area. We saw it, and we know that as price gets close towards that area, the people who took the shorts at these area would of course face immense pressure. But these are positions, these are shorts that are on the market that can be seen by the naked eye. What's not talked about is, of course, the synthetic short position and how that can has a massive gamma exposure. You can see AMC's real pressure or real short pressure isn't just stock loans. It's offshore total return swaps tagged with UPIs. Forensic estimates shows 57 plus contracts equals 1.7 billion plus synthetic shares, mostly invisible to US short interest metrics. And this kind of goes back to what we've said at the start as well. The fact that we don't know truly how many shares there are, but we've seen with so much data just how much exists out there. Just from the total return swaps, it shows 1.7 billion plus. And it's why we've talked about with the metrics that we see, wherever it's ortex or any others, that it is not true because they don't include these offshore shorts that should be included because they do have a pressure, they do have an impact on AMC. And now already from here, you can see the synthetic shares. And going back to what we just talked about previously, this is what we've said with the exposure that is out there for the short sellers. Yes, they will have faced immense pressure at 210 when the price goes up because they took all of these positions. But the positions that they also took at $2.10 but wasn't showing on the market, but that was created synthetically, these are bigger things that they obviously have to worry about, which we talked about with the massive gamma exposure, with what we talked about with the total return swaps. And you can see, I'd expect most shareholders registered on AMC Investor Connect are pretty devoted. If they on average own 285 shares each, Investors Connect members own the full AMC float. I bet most of them also recall the share price when CEO Adam posted checkmate. And so this is something that we've talked about multiple times, and it's something that allows us to truly understand how easy it is for the AMC investors to just hold, and not only that, but to have the entirety of the AMC flow, because everyone only has to own 285 shares. And we are seeing apes who may have not been buying recently, but are holding 4 digits, 5 digits. And on top of that, we are also seeing existing apes and even new apes who are buying hundreds of shares, if not thousands of shares, just like we've shown earlier. So this is just to talk about how easy it is to own the float. Not to mention with everything that's going on, with the fact that we know that not only is retail not selling, but still continuously buying, we're also seeing institutions buying. And the very fact that institutions are able to buy tens of millions of shares, hundreds of millions of shares when retail is not selling, it really just highlights how much synthetic shares exist out there. A big thing that we talked about has been the AMC loan structure, and of course how they're tackling their debt. We can see AMC Entertainment Holdings proposed first lien term loan and senior secured note rated B. And so this is what we're looking at, and this is something that's obviously good, and this is something that we are expecting to progress into forward as well. Now, a big thing for why they're trying to suppress the price, or why we're still seeing this, is because of the share offering. We're seeing how AMC is tackling the debt problems like we've seen here, how they're restructuring their loans. We also know that one of the things that they're doing by raising money by these offerings is the fact they are able to have more cash to invest into their current infrastructure, invest into other investments, pay off debts, and of course, many, many others. And so these institutions, the short sellers, the market makers, they know how powerful AMC can be when it raises cash. And it's why we're seeing constant manipulation, because AMC is still selling shares and they want to prevent AMC from raising as much money as possible. You can see the world's biggest movie theater chain in the world share prices barcoding during the 22.54 million volume on the day. Not only barcoding, but also going through clear price pinning all day long for a long time now. And we know the reason for why this is happening. You're also looking at Cinemark to move after hours because of the Netflix still ending or something else. Now, what we've seen is Netflix pulling out of their acquisition, talking about they want to focus on the company itself. And then we're seeing how Cinemark is profiting from this, yet AMC is not. Now, we'll talk about later on why this is ridiculous and why we talk about how people compare AMC and Cinemark. People talk about the debt problems, people talk about everything else, but we have to have mentioned a very important factor, which again, I'll say something else later on. Another company to look at is IMAX. Now, IMAX is at a 52-week high, and their greatest partner, AMC, is at low. Do they need AMC to do well too? Let's be real. So I want to talk about this because it's very important. It's just another showcase of why we're not seeing real price discovery. IMAX being at a 52-week high is not surprising. When you take a look at the box office, when you take a look at how well the whole thing is recovering, how well companies within this industry is profiting, it's not surprised that people are buying IMAX. It's not surprised that IMAX is going to an all-time high, or at least a 52-week high, because the industry is booming, the industry is recovering. Now, with that said, the same thing also applies to AMC. We are in the same industry. So the very fact we are not seeing the same movement is just another example of why we're not seeing real price discovery. You can forget about the synthetics, you can forget about the naked shorts. The very fact you're looking at IMAX recovering and benefiting from the boom, from how well the industry is doing, and AMC is not, despite how crucial AMC is, it just showcases what's going on. You can also see there's a big reason for why potentially recently we've been seeing so much hate on AMC, especially on my videos as well, but I don't really care about that. But there's a reason for why this is happening. Firstly, it's just because how well AMC is of course doing, and the fact that they are trying to raise money. Every time AMC does this, we are faced with negative news to bring the price down. Not surprised. But from a technical point, you can see this is why the shorts are out. AMC is squeezed down to the point that it would jump above the 9 EMA if it goes above 118 on the 4-hour chart. So on the technical analysis, we're seeing pressure as well. Now, I don't normally mention technical analysis, and everyone should know that as well. But the very fact we are seeing all of these align is something that I do want to mention. Now, another big thing is 2027 is projected to be a monumental year for the US box office, with revenue potentially reaching nearly 11.9 billion, finally surpassing 2019 pre-pandemic levels. Now, this is quite important because it just showcases the movie theater, the movie industry, how well it's going to do. And going back to what we talked about here, the fact that IMAX is at a 52-week high, because of how well the industry is doing, you understand how this is meant to, at least theoretically, benefit any firms, any companies that's within this industry. So by that logic, AMC should include in that as well. Of course, it will not be as easy as that because there's suppression, but this is something that we need to look towards to. So here is the point. What I've been saying the whole time about why, when they make these comparisons about AMC and Cinemark, AMC and IMAX, and they don't mention one important thing. They talk about how AMC shouldn't benefit, but IMAX and Cinemark does, but yet they fail to say this, which is nearly a third of EPR's income comes from AMC, Regal, and Cinemark. AMC contributed 13.7% of EBR's total revenue in Q4 of 2025 and 13.6% for the full year 2025. So if you take a look at this list now, and it may be hard, but this is what we are looking at. And what you will see is how big of an impact that they have, AMC being second. And so this is what we've said with how AMC is doing its job within the industry, is showing how important it is. And the fact that it's showing this, the fact that we're having this income is something that to recognize about why I've said that AMC should also benefit from the industry. Furthermore, what we are looking at is the market that's currently tanking. We're seeing a lot of tech stocks falling. We've seen a lot of insider selling as well. And so this is collateral shrinking, this is leverage cracking, and this is margin calls start happening. And it's the very thing that we've talked about with what would trigger the squeeze and what would put all of these institutions to bankruptcy. And it could be the reason why we've recently seen all of these companies start buying into GME. You can see Pacer Advisor increases GME by 20%, now holds over 22 million. And not only that, what we saw was how GameStop was briefly halted in the German market at one point with no reasoning whatsoever. Also, another big thing regarding GME is the MGM Resorts International, which Burry suggested acquire, is moving aggressively on CZR takeover interest. I find it very interesting because of everything that's included in this, because of everything that's involved. Another thing to mention is we're also looking at Virtue Financial to increase their positions as well. Now, this is something that they've recently took on, and it just showcases about how firms are viewing these companies as the investment right now. We're also looking at Jane Street sued over market manipulation, Ken Griffin Citadel being sued over naked short selling, Virtue being sued for over naked short selling as well. You can see the things that are going on with the market. If you don't believe in naked short, if you don't believe there is market manipulation, the very fact that these market makers are being sued, it's something that you need to realize about what is going on. Another big thing is the explosion of the QSIP numbers that are used to duplicate in covered naked short positions. And this is something we talked about before, but it really just highlights the existence of synthetics. It highlights how these brokers try and get away with this. And this is something we talked about in the past with MMTLP as well. And this is just another showcase of it. And so if you want to look at some examples, here it is. And one of the big reasons for why I constantly talk about regulations is because the self-clearing market is now the 9th largest in the world. Over $2 trillion has been injected since they have laid down the hammer on naked short sellings. Institutions can't cover fast enough. And so if you want to see how damaging naked short selling is and how beneficial it would be for the market if they were to remove it, this is what we're looking at. Now, as always, none of this is financial advice, and take what I say going so make sure you do your own due diligence and research, and I'll catch you guys next time.